AMC Entertainment, the largest movie theater chain in the world, has capped off the first month of the new year with a staggering 525% gain in its share price. The AMC Entertainment Holdings Inc. stock price gained 0.30% on the last trading day, rising from $13.26 to $13.30, and has now gained 3 days in a row. It will be exciting to see whether it manages to continue gaining or take a minor break for the next few days. In this video, we will check out AMC stock predictions. Number 7. Signals and Forecasts. The stock has skyrocketed 563.6% just this year, while the S&P 500 index, SPX, plus 1.64%, has edged up 0.7%. Separately, Handler downgraded fellow cinema chain Cinemark Holdings Inc., CNK, negative 6.50%, to neutral from buy, saying he sees limited near-term upside with the stock mostly back pre-pandemic levels. Despite the downgrade, he raised his stock fair value estimated to $22 from $15. Meanwhile, Handler reiterated his buy rating on IMAX Corp. IMAX, negative 2.36%, and lifted his stock price target to $25 from $18. The AMC Entertainment Holdings Inc. stock holds buy signals from both short and long-term moving averages, giving a positive forecast for the stock. On corrections down, there will be some support from the lines at $9.71 and $4. A breakdown below any of these levels will issue sell signals. Furthermore, there is a buy signal from the 3 months moving average convergence divergence, MACD. Volume fell during the last trading day despite gaining prices. This causes a divergence between volume and price and may be an early warning. Some negative signals were issued as well, and these may have some influence on the near short-term development. A sell signal was issued from a pivot top point on Wednesday, January 27, 2021, and so far it has fallen negative 33.17%. Further fall is indicated until a new bottom pivot has been found. Even before the pandemic, AMC was bloated with debt. The company finished 2019 with $4.7 billion in corporate borrowings and just $265 million in cash. As of the end of the third quarter, that debt had ballooned to $5.8 billion. Number 6. Support, risk, and stop loss. AMC Entertainment Holdings Inc. finds support from accumulated volume at $13.26. And this level may hold a buying opportunity as an upwards reaction can be expected when the support is being tested. This stock may move very much during a day, volatility. And with a very large prediction interval from the Bollinger Band, this stock is considered to be very high risk. During the last day, the stock moved $4.34 between high and low, or 33.62%. For the last week, the stock has had a daily average volatility of 65.74%. Our recommended stop loss, $12.61, a negative 5.18%. This stock has very high daily movements, and this gives very high risk. Number 5. Look closely at the numbers. With revenue down an incredible 90% in the third quarter of 2020, almost any improvement in AMC's business will look pretty impressive on a percentage basis. In normal times, percentages would be enough to consider, but not now. Coming from such a low base, percentage changes could be wildly misleading. Right now, investors need to consider the absolute values here. For example, third quarter 2020 revenue was a paltry $120 million or so. The company's rent costs alone were $214 million in the quarter. If AMC brought in just enough to pay its rent, that would result in a huge 78% revenue increase. Number 4. A slow process. Another key issue to think about is the pace of the business recovery AMC might see. Even as the theater chain starts to get people back into the movie theater, which is highly likely in 2021, investors need to consider how long it'll take to get back to a level of attendance that can sustain the business. Indeed, the vaccine rollout that's currently unfolding is very encouraging. Getting to the point where the vaccines have a material impact on the trajectory of the pandemic is not going to happen quickly. It will likely take several quarters, and the process could even spill into 2022. That means that any improvement in AMC's attendance in 2021, and thus business performance, is likely to be slow and drawn out. Number 3. Desperation. That brings up the very big issue of AMC's ability to survive as a going concern. It is far from clear that AMC can support its business through this downturn while it waits for a business recovery to unfold. In fact, AMC CEO Adam Aron recently discussed just how bad the situation is with a major business news outlet. He explained that the company needs $750 million to get through 2021. But so far, it has only managed to raise $200 million, leaving it drastically short of its goal. AMC's stock price is hitting all-time lows, and recent rounds of debt financing came with interest rates as high as 10.5%. Clearly, Wall Street is worried that the risks outweigh the rewards here, and that is making it very hard for AMC to raise the cash it needs. On that front, AMC has already gotten pretty aggressive, selling 30 million shares in September and October of 2020. Compared to the average share count at the end of the third quarter, which represents a roughly 30% increase in the company's share base. Number 2. Management seems too optimistic. But despite the grim wording in AMC's third quarter SEC filing, CEO Adam Aron sounds more optimistic in more recent public statements. He is confident that AMC can keep its doors open in 2021 because it has raised $917 million in new equity and debt capital since December. The surge in AMC stock may have bought the company even more time. The company also faces operating lease liabilities, deferred rent for its locations, totaling $4.9 billion. Right now, AMC wants to chug along until enough of the general public gets vaccinated to end the coronavirus pandemic. So far, 22 million Americans have received at least one shot, and National Institute of Allergy and Infectious Diseases Director Dr. Anthony Fauci believes things could return to normal by the end of 2021. But herd immunity might not be the panacea for AMC's problems. Number 3. Is AMC Entertainment Holdings Inc. stock a buy? Retail investors are pouring into AMC Entertainment Holdings, New York Stock Exchange, AMC, as part of a market-wide attempt to trigger short squeezes, which is what happens when a chain reaction of short covering actions causes an equity price to skyrocket. The rally has sent AMC stock up 525% year to date. But those who currently own shares in this movie theater operator should consider jumping ship. AMC faces massive losses and a potentially broken business model. The stock price bubble could pop at any moment. Several short-term signals, along with a general good trend, are positive, and we conclude that the current level may hold a buying opportunity, as there is a fair chance for AMC Entertainment Holdings Inc. stock to perform well in the short term. AMC is facing a very difficult environment that will likely see only slow improvement in 2021, even though the depth of the industry downturn will make even a modest recovery look like a substantial change. Meanwhile, it desperately needs cash to keep itself afloat, and that means more and more aggressive financing moves are likely as the new year unfolds. Only the most aggressive investors should be looking at this stock. Even if AMC outlives the pandemic, its stock isn't necessarily a good investment for equity holders, who will face substantial dilution and a high debt load. More importantly, the movie theater business may never return to its former glory, The industry was already in decline, with box office sales falling at a compound annual growth rate (CAGR) of negative 1.4%, and the coronavirus pandemic may have accelerated this trend by encouraging studios to build up their streaming platforms. Do let us know in the comment what you think of this stock. Please subscribe to the Stock Advisor. Thanks for watching.